Yeah, I mean, to be honest, it's a big theme for us as investors across all markets at the moment. There is a distinct lack of clear, strong growth opportunities, and there's an awful lot of money chasing those growth opportunities. And therefore, I think, having to go that level deeper, thinking about maybe, okay, well, if the turbine companies themselves are not attractive valuations anymore, what are the components that are going into those turbines? It's that kind of level of thinking. But I think that, as you say, that's a problem we have as investors. There's too much money chasing too few growth opportunities.
Karen, what's a very good morning, by the way. What do you think the timing now looks like for the rotation from COVID losers into what ultimately should become COVID winners? Because we've seen a number of false starts here, where you saw the shipping groups, the carnivals, the cruise groups, the airlines, a lot of those restaurant chains. They did benefit from an optimistic bounce in the third quarter of last year. And yet, as we come into this year with the pandemic still very much among us, it does seem that the opportunity set in these businesses has been delayed. Have you got a good feel for when you think it might be the time for a more fulsome rotation?
Yeah, I mean, you're right. That sort of prospect of normality has been pushed out. And I think that's partly because of the supply and distribution of the current vaccines to deal with the strains of COVID-19 that we have at the moment. But of course, the thing that's shaken markets as well, or perhaps pushed out further those expectations, is these mutations. Our core expectation is that by the time we get to mid-year across the developed world, we will have vaccinated, the significant proportion of the population, which means we're back to a pretty good degree of normality, at least domestically. I must be honest, I think this risk of new mutations could potentially have more lingering impacts on international travel, and therefore I think picking through that cyclical story to something you're pretty clear as being a domestic consumer bounce versus one that really relies on international travel, I think that's the level of detail we need to get into. And then, of course, the other thing we need to be cognizant of is, for that full rotation from growth to value, there are some other tailwinds that need to kick in, and particularly steeper yield curves. The financials really aren't going to be outperforming tech until it's pretty clear that yield curves are going to be steepening, and we're not going to be talking about deeper negative rates. So we're going to have to wait a little bit longer for that. But I would say by the second quarter, when we're getting that visibility on the strength of the recovery, then some of those cyclical plays are going to be doing their job.